The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 4th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. Of course, I would frame it as empowering human potential. That's really what we are trying to do here, what we are going to do here at TFNN.com. You can always give us a call at 877-927-6648. Hope you had a wonderful weekend out there. Great to be back with you. Maybe a little Super Bowl. I can tell you one thing. We won't lose the power here at TFNN.com. Let's go take a look at one of our tools. This is the tool that I call starting the process of change. Now, the biggest challenge that each of us face in personal development is the process of change. And change begins with understanding that it's not what happens in the world that determines the major part of our future, because what happens to one of us, quite frankly, happens to each of us out there. The process of change begins when we break our old patterns out there. And that means doing something different than what we've already done. Do something different, folks. Become an explorer. I hope you're becoming an explorer, taking a look at new chartered patterns that we feature here all day long, 9 hours a day here at TFNN. You know, if you are looking for more out of life, then you've got to realize that what we have in our life at this exact moment is everything that we've attracted into it because of the person who we have become. If you want more, you have got to become more. It is just that simple. Maybe it's a book. Maybe it's a workshop. Maybe it's a class that'll get things kicked off for you. Change, folks, begins on the inside. It's always our way of thinking that's really going to go ahead and make those changes in life. Don't wish things were easier. Just simply wish that you were better. Don't wish that you had fewer problems. Just wish for more skills out there. So let's go take a look at the skills of the marketplace here. Let's go see what's going on as we take a look at the first chart here. You've got futures are trading down this morning, which is kind of unusual after a strong day on Friday. After that pop, looks like we're getting the pop, and today looks like it's the drop. We've got the Dow futures trading off about 67 points right now out at 13,865. The ES Mini trading down about 7 points, 1,500 even Steven. The NASDAQ futures off 14 down at 2742. Russell 2000 off about 4.5 points out at 903.60. Of course, the king. We were taking a look at the king. We were focusing on King Dollar if you joined us on Friday, and it's really all about the king. That means it's also about the queen out there. King Dollar up 31 ticks right now, trading out at 79.44. And we will peek in on the ES Mini out here just to give you an idea as far as what is going on here this morning. You can see price moving down into the oversold territory. If you're saying, hey, Steve, what does that mean? Maybe you're listening in on TFNN.mobi, or perhaps you are actually catching the live stream because you went to the homepage of TFNN.com, and over on the right-hand side, you saw those three little smartphone devices. You clicked on it, and you can catch this show streaming live. But remember, you can always catch an archive of this show on Channel 9. And what we're taking a look at as far as oversold, we're just simply using one simple indicator out there that no matter what technical level of skill that you have, it's something that's easy that can be added to any chart that you've got out there. Because when you're trying to determine whether you should be buying, whether you should be holding, or whether you should be folding, you want to make sure you understand where the relative strength indicators. You also want to make sure that what you are paying attention to are candlesticks out here. Well, as we take a look at the ES Mini, this is a 10-minute chart. that we're looking at. And I use the 10-minute charts or 30-minute charts here early in the morning just simply because of the repetitive, during the couple hours that I'm on here with you, you'll be able to see these chart patterns. You'll be able to see these levels attacked and then what happens out there because they provide you with all kinds of information. But it works the same way whether you're looking at a daily or a weekly chart out here. We can see as the market moved lower this morning, we're looking at the ES Mini as we were coming on, at about 8:30 this morning, moved down to a price point of 1497.75 out there, right around 1491. We'll go take a look at it on the 30-minute chart is where we've got a hammer candle. So we know that is a strong area of support, or should be a strong area of support. So that's one of those areas you're going to want to make sure you have written down on a pad of paper, 1491 and a quarter, I believe, on the ES Mini. And we'll take a look at that 30-minute chart. We'll see where the bulls are really camped out. Now, as the market moves down into an overbought condition, or oversold condition in this case here, what is it going to do? It has to work itself off. And it's going to work itself off either by moving up or just simply moving sideways. Right now, the key is going to be getting outside of this last bar here. This is a 10-minute bar at 820. The high of that bar is 1501.25, trading out at 1500.75 right now. All that the market is doing, what's going to be really critical, what's going to be really key today for all you bulls and bears out there is what happens during this first bounce here this morning. What has the market done? It's come off of the overbought condition. That was as it was making its highs coming into the 2 o'clock time frame. So we're looking at the futures contract on Friday out there. On the futures contract, the high was out at 1510.50, coming in right at the 2 p.m. time frame out there. So you can see here, trading up towards the top of that relative strength indicator. Is that an area when something is up towards the highs where you should be buying? Absolutely not. It most certainly isn't. If you're going to be buying an equity, if you're going to be buying a future, if you're going to be buying a currency, whatever it is you're going to be buying, make sure that the pattern is completing when the relative strength indicator is below the 70 mark. In fact, preferably below 50 and as close to 30 or under that, and wait for a reversal signal before you go ahead and pull the trigger. On the 10-minute chart, have we seen a reversal signal? No, we haven't seen a reversal signal. Let's go peek in at the 30-minute chart. See what the 30-minute chart of the ES Mini looks like. You're not going to see a reversal signal out here. In fact, quite frankly, as it works off this oversold condition, and on the 30-minute chart, it's got more meaning than a 10-minute chart. 10-minute chart just has more noise. 30-minute chart has more noise than a 60-minute or a daily chart out there, and a daily has more noise than the weekly chart. But you can get a falling three pattern out here anytime within the next hour and a half, 2 hours. If you get a close below the 830 low out there, really the 830 body. The 830 close, we're going to use 14.99. And if we take a look at, it's right, well, where is that hammer candle out here? There we go. Here's our hammer candle. So this is the candle you really want to be paying attention to. This is the one from 10:30 in the morning. This is the hammer candle. 1491.25 is the low. That was from January 28th out there. It's possible we're seeing the A to B leg of an A to B equals CD down. The A leg being that high coming in at 2 o'clock. Let's take a look at retracements here off of the high at 1510.5 down to the low that was put in this morning. You can see here the ES Mini getting down into that oversold condition. However, it had weaker, I can't use the word weaker strength. It had weaker weakness. How about that? Out there, and that suggests to me that, and then I'm just taking a look at some candles out here, it suggests to me that we're going to see the ES Mini back down at these levels here. So if we take a look at just simply the dead cat bounce, 0.382 takes the ES Mini up to 1503. We're going to 1502.50 to 1503. 0.618, that's the suite that you would come visit us here in Clearwater if you're ever in the area here at and visit us here at TFNN. At 1506 happens to be the suite 618. So if we take a look at A to B equals CD, we know our A point and our B point. We're just waiting for that C to form. Let's assume it punches all the way up into suite 618. 1492 is the level that would be a 1-to-1 A to B equals CD. And at 1492, it's going to get into that hammer candle from 10:30 in the morning on the January 28th out there. That's why that becomes a very important area for us to be paying attention to. Of course, what is it all about? Well, it really is all about the king and the queen. Let's go peek in on the king here, because the king happens to be back in the building after his tour out to Denver, Colorado. Heard it was just simply a fantastic show. For all of you that attended the workshop that Daryl Martin, Nadex, Tom put on. Thanks so much for doing it. I heard it was just simply a fantastic event out there. And as we peek in on the king out here, we're taking a look at that hammer candle on the daily chart. So now we're looking at a daily chart. That is the December 19th candle. The low there, 79.01. That 79.01 was hit with a little doji candle here. It was attacked on Friday. We're seeing a higher, right now we're seeing higher price inside there. Now what we can say about the U.S. dollar index out here is this 79.01-ish range, the 79, the actual October 17th has a reversal signal. That's when the U.S. dollar index traded down at 78.97. You had a little bullish engulfing candle form. So this low here is strong resistance. Was tested again on Friday. We're seeing a move higher. We're seeing also with regard to the U.S. dollar index, seeing how it's moving off. If you were going to be buying something, right? If you're going to be buying something, you want to be buying it when you're down towards the relative weakness side of the RSI, down towards that 30-ish area out there. So if you were interested in buying the U.S. dollar index, this would be a good time to buy that. Is it possible we're looking at a trading range anywhere from the lows here? We already know where the bulls are hanging out. We know where strong support is. It's really clear. It's in this area of 78 to 92, 79 to 1, right around there. Now the question is, will it travel all the way back up to the strong resistance area? Strong resistance, very easily defined. That happens to be the gap down from November 21st on the U.S. dollar index. That level, $80.94. We can see that was tagged on December the 7th. It was tagged as well on January 4th. That looks to be the upper part of the trading range that the U.S. dollar index is in. Of course, if we go take a look at the currency pairs, because this is what it's all about, it's really about the queen. Because U.S. dollar index, nothing more than a basket of currencies, with the euro being the number one weighting inside there. Then you've got the yen and the pound and the Canadian dollar. Those four currency pairs really make up the bulk of the U.S. dollar index. If we take a look at what the queen has done here, the queen on Friday made a 1 to 1.618, A to B equals C to up. That's coming off of the euro down on November 13th. But by the way, you can take a look at that relative strength weakness. And where was that on November the 13th? Yes, that was coming in off of the bottom out there. Had a couple dojis as it was making those lows. Said the market was getting a little bit tired out there. Your A leg starting at the bottom of November 13th out at 1.26593. Moving up and forming that B point on December 5th out at the 131.252 level, making only about a 0.382 retracement. What does that tell you about your A to B equals CD? Yeah, it's going to do more than a 1-to-1. On Friday, makes a 1 to 1.618. Of course, we know that oftentimes when a market makes a 1 to 1.618, it's going to do something different. Of course, what we can also see is, from a relative strength standpoint, into the overbought territory. So it's got to work its way off. Of course, right now today seems to be working its way off with a bearish engulfing candle. A lot of time left in this trading session. However, if the euro closes below 135, 758 out there, that will have given you a little reversal signal out here. The euro overbought. It's got to be worked off out there. 877-927-6648. Pop it in the markets. Acme Packet being bought out by Oracle for looks like about $29 a share. Apple closed at $4.53. Last trade fired off at $4.54 out there. Herbalife to the downside. Anheuser-Busch down as well. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Some problems over in Europe this morning. DAX trading down 114 points. FTSE off 75. Both of those indexes off a percentage and a half to 1.1% over in Asia. A little mixed market. The Nikkei up 69. The Hang Seng down 38. And the Shanghai up 10. Let's go out to Orlando, Florida, to Anthony. Anthony, thanks for calling. Thanks for holding. How are you this morning?
I'm doing okay. How are you doing today?
Excellent. Excellent. Thanks for calling. You wanted to take a look at Nokia. NOK is the ticker symbol. Tell us what you're doing, how I can help you out.
Well, I want you to take a look at the chart, and I see that you have filled up that gap, and it's losing strength coming down. But, of course, I want your insight if you can take a look at it.
Are you in it, looking to get in it? Tell me what you're doing that I can, and what's your time frame that you're,
Well, I got in on a Friday.
Okay.
And I have a stop loss put in place below the $3.65.
Between $2.65?
No, 360.
365. Okay, great. Okay, thanks. Okay, so if we take a look at Nokia, what it did do, Anthony, is you're right. You're looking at Anthony was first looking at the gap that was created on December 31st to January 2nd. Of course, all of the markets are like that. So first thing is when you take a look at this equity compared to the markets, we had the markets making highs right on Friday, but Nokia was pulling back into that December 31st area. And so from just simply a directional standpoint with regard to the markets, what this would be telling me is that Nokia is one of the weaker links out there because it wasn't moving up and making highs. Now, in addition to that, if you just take a look at the chart, it was also showing you some weakness in that it made a high on January 23rd. And when it made that high on January 23rd, what it did, Anthony, is it created a little shooting star candle out there. And that shooting star candle is a reversal signal, and that shooting star was coming right into an area of a larger gap down, which was from the April 11, 2012 timeframe. So as Nokia was moving into a natural area of breakdown, which would be resistance, it also gave you a reversal signal. And then the following day gave you the real reversal when it gapped down. So your potential on going long here, or where it is that you're going to run into resistance if this should pop, is going to be the high of January 24th right now. So 444 is an area where I would expect, if it does pop, where you would get the market to turn it back again. Or at least you've got to pay attention to that level because it has 163 million shares up there, and that was a gap down. And on Thursday's session, we had 90 million shares on the way down, and on Friday's session, only 42 million on the way up. This is setting up to me, looks to me like this actually wants lower price, not higher price just yet. And so the other thing that it was doing, you picked out this gap here in the bullish engulfing from December 31st, but that has 34 million shares, and on Thursday it moved down into that with 89 million shares. At a minimum, what it says to me is the bottom of that candle from December 31st needs to be tested, and that's at the 379 level. So your stop is 365. I agree with your stop, most certainly. What I would really also be paying attention to is the down below the swing point is where is the next area of possible support. And where that would be on Nokia would actually be the gap up, Anthony, on December the 5th. And the low of that is 355. So from a trading standpoint, the 365 might not be the best place for you to have that stop because it could, I can't control the markets, you can't control the markets, but from a technical standpoint, if it breaks through the swing point, which I suspect it will, which of the December 31st area, your next logical area of support to find out is going to be probably the December 4th high, be at the 346 level or the low of December the 5th out there. But from a long standpoint, what you haven't received here is a reversal signal the other way. And my concern would be reward to risk. You've got some real resistance to the downside on this equity. So that's my call on it. I hope that.
I bought it for a short time, to sell sometime at the high of this week or so on, because I thought that it was going to resist the gap there and probably go to 4 something sometime this week.
Yeah, I can't tell you whether it will. What I would, the message of the markets is that this equity got to an area of resistance, gapped down with volume. Then, on Thursday, went ahead and gapped down with some more volume. So you're identifying the gaps, but the resistance area that you've got, I don't know if the reward to risk is there. I would wait for the relative strength, weakness to move down closer to 30 out there. All right, my friend. Thanks so much for calling. You bet. Have yourself a great day. Dow futures off 75, ES Mini off 7.5. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 94 points, S&P down 9, Composite off 15, small caps off 5, Microsoft down 29 ticks, Intel off 4, Google off $5 and change, Cisco up 12 pennies, Apple up a buck and change here. Popping to the upside, you've got Brown and Brown. BRO is the ticker symbol, up $1.61. That's up about 6%. Perigo Company, PRGO, up $1.78. Decker's Outdoor, DECK, up $1.43. Rockwell Medical, RMTI, up $1.25 out there. To the downside, Google leading things dollar-wise to the downside so far at the open, off $6 and change. Herbalife down $3.78. Bud off $2.85. New Skin Enterprises NUS off $2 and change. Chevron, CVX off a couple of bucks. Royal Dutch Shell off $1.57. Interesting. Sohu Com, SOHU off $1.56. Tiffany, the blue box company, off $1.58. Royal Dutch Shell, maybe I already mentioned them. No, I got them up here twice, both the A and B shares. How about that? And let's go take a look at, so we're looking at the euro before I went to Anthony, I believe, and take a look at a reversal signal right now, at least so far, that we're getting in the market. Of course, you've got a weaker euro. You've got a stronger dollar out there, the euro being the strongest or the being the highest weighting structure inside the U.S. dollar index. So where could the euro move down to? First, the 0.382 retracement would be nothing. That would be natural. That would be normal. That's in the 133.2-ish level. More likely, Sweet 618. Sweet 618 would take the euro all the way back into the January 10th candle. That's where it last broke out, had a nice wide-ranging bar. That's in about the $1.36 type, 1306 when I say $1.36 out there. So that looks to me like where the euro is headed to. That makes sense when we were taking a look at the U.S. dollar index earlier and the candle configurations out there. Now, if I do go over and today's trading, I just want to put this in perspective to you. If it were to close lower, significantly lower, is very unusual. Very unusual with a pop like you had on Friday. If we go over and take a look at the indexes here real quickly, we'll just go take a look at let's take a look at the Dow. So we'll pull up the Dow Jones, and at this stage here, if you take a look at the Dow, obviously cracking the 14,000 mark. Now, what we do know about the Dow, if I get rid of some of these lines here, we can go draw that butterfly pattern out here. But before we do that, I'm just going to get rid of the lines, and we can see the this candle that formed on the Dow on Friday. As far as strengths of candles are concerned, that's a type 1. Type 1 being the strongest that you can out there to the weakest. That is where you basically open at the low and close at the high, just off of the high out here. So that is a type 1. It's the same type of candle, although not as wide as the January 2nd candle, if you take a look at that on the Dow, but not too shabby. It's not that far behind it. And markets do not, now from a bullish standpoint, the good news is markets typically don't end on those candles, and they don't end when you are completing patterns. The pattern being a 1.272, a butterfly sell pattern out there. So it'll be very unusual and it will be very telling. And that's really why I want to point this out to you. Be very telling today if the market were to give back all or most of its gains from Friday's session. Do I expect that that's what we're going to see? Absolutely. And we've got significant butterfly reversal patterns that are out there. These 1.272 patterns. We've got the markets being in an overbought condition. It's got to be worked off, and it's going to be worked off either by pulling back or just simply by trading sideways. But after Friday's action, just take a look at things one day at a time, or comparatively speaking. If you take a look at December 31st, now, or January 2nd candle, I should say, take a look at that strong candle, very similar in strength to what we were looking at on Friday out here. You can see, okay, it worked its way off just simply by moving sideways, but not this little dark cloud cover like it is that we are taking a look at right here. If we take a look and come back and find other candles similar, you can take a look at a candle back here on October 16th with the Dow. Does it pull back all the way? No, it doesn't. If we go find other candles like that, you can take a look at September 6, 2012 out here. Here's one of these type 1, very strong candles out there. Does it pull back like we're seeing today? No, it isn't. And you can watch, folks, and this is what you want to be able to do. This is part of pattern recognition out there. It's part of understanding the importance of candlesticks, because it's what bulls and bears are telling you is going on in the marketplace. We take a look at another candle where you open at the low, you close at the high, go back to June 29, 2012. Is there a pullback out here? No. Obviously, this was an extremely important candle. This being the June 6th candle out there. This is the Miami hurricane. This is the hurricane candlestick pattern. At least that's what we're referring to it here at Stevie's shop on TFNN. But take a look at just simply the pricing action that you can see out here. So you can see if you just simply come back here, you had a little bit of a reversal. You got to go all the way back to April 17th to find a similar candle where you went ahead and you did some type of pullback, much like what we're seeing at the moment here in the market. So, very unusual trading out there for the type of candle that we had. You had a little bit of a pullback after a similar candle on March 26th on the following trading session. But for the most part, what you get is you get some additional follow-through or a little bit of sideways. You don't go up 146 points and get back 95 at this stage. So today's candle close, folks, will be giving you a huge clue out there with regard to what's going on in the market. Talk about clues. Let's go down to Sarasota, Florida, and talk with John. John, thanks for calling. Thanks for holding. How are you today?
Very good. Thank you, Steve.
My pleasure. How was your weekend? Did you take in some Super Bowl activity?
Well, I watched the Super Bowl, and I was winning $5, and then I lost $5. So.
Oh, okay. All right. So now what did you think of the power outage?
I thought that was quite entertaining.
I think it's going to make for a great Saturday Night Live skit. Do you like Saturday Night Live?
Yeah, once in a while.
Okay, yeah, it's hard. You got to kind of tape it if you're going to watch it. If you kind of, But I think it'll make for. I can find lots of different ways to turn that into a fun. Because everybody tunes. Well, not everybody, but a lot of people like the commercials. I think that's probably the best commercial there that they could come up with. And I can think of some interesting scenarios to have the lights go off. But we won't do that. You want to take a look at the lights going on, which is in the UUP, the ETF for the U.S. dollar index. Tell me what you're doing and how I can help you.
Well, is it time to buy the UUP?
It's as good a time as any. That's for sure. I would say, if we go back and take a look at the U.S. dollar index out here, what you've got to base it off of the U.S. dollar index, and unless this, so you're buying towards the bottom of the range out here. You've got a tested hammer out there. You've got other bullish support over from the trading session of October 18th, October 17th out there. So your base floor has been set very nicely. If we take a look at the UUP out here, the ideal time to have bought it was on the reversal, perhaps on Friday. It's obviously it's moved up here this morning. But if we do take a look at the UUP, where this could probably move back up to, and you've got to do the reward to risk. The top of the range is most likely the 22.05-ish range. So call it $22, and it's at 20. Let me make sure I got the $22, and it's at 21.60. No, is that right here? Yeah, 22.05. And it is at 21.69 right now. So that's where this thing, 22.04, I think that's really the top of its range at this moment. Where I'm going back to on the chart out here, John, is just really the gaps down, this open gap area, this resistance area. You could really just draw a line across it, and it seems like that's really where it's headed to, is the 22.03. So reward to risk, I don't know if that pays off, because your stop on the UUP certainly needs to be a close below, I'd say, like 21.53.
Right.
So that's how I would trade it. But I don't trade the UUP enough to know whether that's really where it's headed to, or is it really headed towards the November 16th level, which would be around 22.30. All that still being said, I don't know if the reward to risk is in there.
How about the YCS?
YCS. So the YCS, if we would go take a look at the yen. So that potentially, I think, might be the better trade out there. And let's go take a look at the yen and see what it is doing. So if we take a look at the U.S. dollar Japanese yen currency pair, what I would be waiting for is more of a reversal signal than what we have today. But I think the yen is going to take a tumble, and I'm not sure where it's going to come from, but it is going to come from somewhere, and it's going to have a nice retracement. Now, as the yen gets stronger, the U.S. dollar index will get weaker. So, kind of putting that in perspective with regard to the UUP out there, you could still have the euro getting weaker, which would impact our markets, but you're going to have some offsetting signals here, because if the euro starts to pull back, and that's the signal that it's given us today, and then the U.S. dollar Japanese yen starts to pull back. In this case here, if the U.S. dollar Japanese yen currency pair pulls back, it says our markets it says the yen gets stronger and the dollar gets weaker out there. And I think the YCS would be a better trade for you, a better reward to risk. The only problem is, at this stage, you haven't really received a reversal signal, and that's what I would like to see. You could continue to nibble at it and maybe take some small losses, come in with a small position, and then add to it if it's in a winning position. You might be able to take a look at that. But on the YCS, you would be looking at shorting the YCS versus taking it long
at this time.
Yeah, but see, it's just like to me, I prefer to get, I would rather pay more, or in this case, or short something at less of a price, just simply to have a reversal signal out here. and the yen hasn't just given it to us just yet. There's no reversal. And what I refer to as a reversal signal is really a candlestick, at least one candlestick, and we haven't gotten it. Whereas if I switch over to the euro, there's no question that today's activity in the euro-US dollar currency pair, right now today it's a bearish engulfing. Hasn't closed here, but if it does, if the euro closes at less than 135.758, that would be a reversal signal. But I think you're on the right course, and I think that right course is paying attention to the Japanese yen, because that baby is stretched. It is absolutely stretched, and there's going to be some air come out of that balloon. So I think that's your better trade from a currency standpoint in using the ETF structures.
Okay.
All righty.
Appreciate the help. Thank you very much.
Oh, my pleasure, and thanks so much for calling. Folks, let's go take a look at some of these stocks here that are popping and dropping. If we go back and I hope that conversation, helped to understand, because the UUP is obviously really tracking the U.S. dollar index. And so when you're tracking the U.S. dollar index, you've got to be very cognizant as to what the underlying instruments are. Well, the underlying instruments are going to be, the primary ones are going to be paying attention to the euro, U.S. dollar, the U.S. dollar, Japanese yen, the Great British pound, which we didn't take a look at, and the Canadian dollar. Those four currency pairs are going to have an impact on what the UUP is doing out there. So as opposed to what John was asking about, which was the YCS. The YCS is just dealing with one currency pair only, U.S. dollar, Japanese yen. So I think it's a little bit easier to take a look at one signal from one currency pair and then play that ETF that's underneath it, versus in this case here, what we could be seeing is the U.S. dollar getting weaker because of the Japanese yen, yet the U.S. dollar getting stronger because of the pullback in the euro out there. So I hope that kind of brings it around full circle for you in any event. And if it doesn't, I apologize. Did the best that I could out there. Now let's go take a look at some of these stocks here, popping and dropping. So we've got BAP is the ticker symbol. Credit Corp is the actual name. So let's go see what this stock here is doing. I don't see any news on it. So let's go see what BAP, B as in boy, A as in apple, P as in Paul. Gapping down this morning with some volume, and let's go see where the volume bar is that this is headed to. As we take a look at this, it's trading out right now at 148. So giving you a island reversal top. So this one's got some significant trouble. In fact, it really says when you see an island reversal top like this, this says that this. And let me just refresh my chart here. Make sure that this is. Yeah, it's accurate. This would say to me, we'll come back to the volume bar. We'll take a look at an intermediate step. But this would say to me, this is going to come back to where it really last broke out, which would be August 21st, 2012, in that 117-ish to 114 level. Island reversal from the standpoint that on the trading session of Thursday, this gets up to a high of 156.95, gaps up the next trading session, that low 157.70, and this morning gapping down. Create that little island out here. That is a very bearish signal. You've got a high volume bar with no wide price spread. In fact, the price spread was to the downside on November 30th out there. So even though that's a high volume bar, that is not a breakout session. That is the first area of support that this would find, which is somewhere between 138.02 and 142.80 out there. But more likely, when you see this type of reversal signal out here, looks to me like this will come back to the original breakout, or the most recent breakout, true breakout, which will be August 17th, 2012 out there. That is, this is kind of a nasty gap down. This one is really nasty. This takes you back to June 7th, 2011. That is where volume is hanging out. We're talking major volume on this equity chart. 5 million shares out at the 81.76 level. 877-927-6648. Dow's off 104. S&P's off 9. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow trading down 91 points right now. And let's go take a look at the daily futures contracts here. I'll give you some numbers to be eyeing and paying attention to as the market comes into the close. So if we take a look at the NASDAQ out here, really the wild card out here. And when I say wild card, I mean wild card because on Friday it did have it try to break out of the sideways trading box. So right now, today, it has also rejected the January 2nd high out there. That high is 27.4275. Nonetheless, if this closes today below Friday's open, that open was at 27.33. It have a nice bearish engulfing candle out there on the NASDAQ futures. NASDAQ futures here, you can see neither overbought or oversold, really in the middle of the range and trading above the 50 line. So the NASDAQ out here is the wild card. If this market's going to reverse and move higher, it's going to be led by the NASDAQ, in my opinion. for whatever that is worth. Let's go take a look at the Dow futures out here. If we take a look at the Dow futures, the Dow, giving back right now a good portion of its gain, 2/3 of its gains from Friday. Still early in the trading session. Dow futures closing below 13,833. Look, already right now it's a little dark cloud cover candle out there, but you get a little bearish engulfing candle with a close below 13,833. Trading out right now at 13. I wish I could actually read. 862. 13,833 would be the number out there for a bearish engulfing. If we go take a look at the ES Mini out here, ES Mini would do the same real setup out here. ES Mini today, if it closes below 1496, you'd have a bearish engulfing. And why is that important? Well, it's important for all of these. If I take a look at the butterfly pattern coming off of the September 14th high down to the low of November 16th, and we just take it right up here, you're going to see 1.272 butterfly out here. And it's very important when you're making these patterns. Now, with Friday's market coming in with that type of candle into what I'll call the D point, the A to B equals CD, which is also an expansion of the 1.272, also would be very unusual today if you got a complete reversal signal. If you did, as I'm saying, it's just like, it's a loud signal being sent to the marketplace and at least reading the message of the markets out here. And that's the kind of reversal signal that you actually want to see when these types of patterns are actually formed out here. If we go take a look at the Russell 2000 futures contract, Russell 2000 futures really right now is traveling in that reversal area. And we know that we got the first reversal signals that we received in the marketplace. The first one actually came in the inside the New York Stock Exchange. That got wiped out on Thursday, certainly on Friday. But we saw some weakness finally coming from some areas of strength. Well, the Russell 2000 also on January 30th went ahead and gave us some weakness. That was taken out with the close on Friday. Reversal signal again showing up here. Now, if we take a look at the Russell 2000, we're not looking at a butterfly. We are taking a look at a 1.272 expansion, though, and that's off of September 14th's high down to the low. It's actually just above that 1.272 area. But the Russell 2000 indicating some weakness out here. Bearish engulfing candle today is a close below 903. When we do the Money Masters show here coming up next, we'll go take a look at the actual indexes. We'll take a look at where those bearish reversal signals would enter into the marketplace as well. So right now, the Dow is off 86. S&P is off 7. If you're off to start your day, folks, have a great Monday. We'll look forward to seeing you tomorrow. And if you're going to be here with us during the Money Master Show, just stay tight. We'll be back in about 9 minutes. Remember, folks, you have an amazing power. That power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses. Most of all, create fantastic, loving families, folks. Thanks so much for being a part of our TFNN family. Have a great day. Bye-bye now.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.